Bank of England's rates cut, 0.25%. Is there more to follow? Is it good news or bad? What does it mean for us as property investors? Secondly, immigration, the highest it's been for 75 years. Can you believe it? Is it time to panic? Should we pack our bags? London flats, dead in the water. What's the answer? There we go. So controversial stuff this week. Sources on Knight Frank, thank you very much, Savills and the lovely Financial Times. So Bank of England cuts rates by 25 basis points. It's now the lowest it's been for 2 years. And I know many of you may well say, well, lowest it's been for 2 years, so what? You know, that doesn't compare to what it was 3-4 years ago when it got to 5%. It doesn't compare to when I was a kid at 14%. So get some perspective. And look what we're doing. Bank of England policyholders for several weeks been giving speeches emphasizing the progress made in tackling inflation. The pivot to fretting about slowing growth and weakening jobs market has now occurred, and it's been seen by investors as a sign that interest rates could be as low as 3.5% by next summer. So quite amazing. Which is why yesterday's tight vote, which 4 of the 9 members of the MPC voted to pause it. 4 said to cut it by 25 basis points, and 1 said cut it by 50 points. So there's a lot of uncertainty there. What does that mean? It means that they don't know what they're doing. They don't know what's going on in the marketplace, and it's very difficult to know. Governor Andrew Bailey said, yes, I do think the path continues to be downward, before adding, there is, however, genuine, and that's rates cutting, however, genuine uncertainty now about the course of what direction of rates. And I'll be honest with you, when people say that, they're not being... The point I was making is that I think the path has become more uncertain, i.e. he doesn't know if the rate's going to be cut further or not. Yes, they will be. Gilt yields and the pound climbed in the wake of the decision. Probability of another basis points cut of 25% fell to 75%, where it had been at 100% before the weekend. So that's a bit of a negative thing, but it's really about what's going on. Outlook for borrowing costs is very, very, very positive still. I think a lot of it is built into the market now already. I think a lot of the banks have said we're expecting that and have cut rates already. I do believe that what we're seeing at present is probably as good as it's going to get for the time being. So unless you're waiting to the end of the year, I would fix now. It's not a bad time to do it. Knight Frank, Tom Bill said to Bloomberg, some parts of the economy are already adopting the brace position, and buyers could begin to hesitate after the summer if speculation over tax rises persists. So if you look at carrying on increasing taxes in the UK, they've already increased national insurance hugely, and that is affecting people's companies' spending power, which is shocking. They really need to do something to make the economy pick up, and it's not occurring. So mortgage rates probably as good as it's going to be for the time being. So is it a positive? Yes, because it creates positive sentiment. People look at it, and most people will look at just what goes on in the pub, or they're reading the press and they go, rates are being cut, that's pretty good, and they'll go out and buy. They don't actually look underneath it all, and it's a lot of pub talk about that, which is absolute rubbish really. But the point is that rates are coming down. You are seeing some good capital appreciation around the country. Average rentals around the UK at this moment are still 7%. That's a great rental yield. That's average for the whole of the UK. So it's a great time to be buying and doing that, especially if you're borrowing it, as we would as international people, at about 5%. So is it good news? Yes, good time to fix. Now, migration. Second biggest population rise in 75 years. The population of England and Wales rose by 701,881 between mid-2023 and mid-2024. That's huge. What does that mean? It means it's putting more and more pressure on social services. I was watching, and I should admit to this, I was watching Jeremy Clarkson, and he was talking about China, and he said that China is building 6,000 kilometres, I think it was, of motorways per month, if that's right, I'm remembering. And they had built 80,000 over the last 10 years, something like that. So perhaps it's 6,000 a year. How much have we built in the UK? Yet we've got all these people coming in. We've got very few new hospitals. We've got a health system that's cracking and creaking. We've got a bad situation going on. So bringing more people in and allowing them to come in, what pressures it put on the infrastructure? A bad pressure. What does it put on housing? It means that the cheaper end of the rentals are being taken up again by these people coming in. Or perhaps they're living with their folks, but still they're taking up a lot of the potential rental situation that people need in the UK. So it's just adding more pressure, and to us as investors, I'm sorry to say that's quite a good thing, because it means there's more demand for buy-to-let properties, and there's less buy-to-let out there, and the government is not going to be able to keep up. Of course, they all blame one another. The Conservatives are saying the Labour Party is not doing enough about it. The Labour Party is saying Conservatives let too many people in, too lax, this, that and the other. But at the end of the day, it's a shortage of rental properties, but the figures, that's amazing. The biggest population rise for 75 years. Can you believe it? So now, London flats. Now, it's too expensive, no good, won't work, this, that and the other. And I've been looking at it a bit myself because I've got quite a few clients who have been asking about it, who don't want to buy up north in Birmingham, Manchester, Nottingham, places like that. So is it a waste of money? Are there no investment returns? Is it too much hassle? A leasehold flat in London is certainly not very fashionable at the moment. What happened in London, you had the COVID rush to houses, people moved out, house prices started going up in price, the rentals on flats fell a little bit, and then the rentals, the value of flats fell as well. And in the centre of London, you're still between 3.5% and 10% down in some areas. So that's quite a big drop. You often get higher service charges. It's not clear on the legal aspects of who owns what, how long is the lease. You've got legal hazards. So is it a waste? It could be, yes. It could be a waste of time. But let's look at what you're trying to do it for. If you're only going to use it a few times a year and you're looking for a pied-à-terre, perhaps for your kids to use during uni time or for you to use during holidays, then, it wins hands down. It's secure, the maintenance is low, and often they come with concierges. It's an easy way to get into the market. Potentially the returns you can get are fantastic. Due diligence is important. I know we have the Leasehold and Freedom, what is called the Leasehold and Freehold Reform Act of 2024 coming in, which means that a lot of the short-term leases will be extended, but that's going to be years in the making. And one thing to look at is if you buy something with a 110-year lease and it seems like a bargain, then what is the situation when you come to extend that lease? You can double the price of the flat. So it's important to get a good surveyor on board when preparing an offer. Look at the service charges, look at the genuine increases. We all have to pay for our heating and maintenance, but look at the unjustified ones. Get 3 years worth of accounts and have a look at those. All these sort of things, and they must be provided by the vendor. So look into those sort of areas. Check there's a reserve fund to cover future work. Look out for peeling paint, worn carpets, crumbling facades, all that sort of stuff that shows it's not been looked after. So perhaps the management agent is not that competent and perhaps they're not spending the money where they should. Look at those sort of things. Be mindful of refurbs. Anything over, I think, 6 stories or 5 stories and 11 metres falls into the Grenfell Tragedy Act, which basically means that it's very difficult to get work done on them. There's a big backlog of people getting these sort of surveys done on their properties, and you can't get a loan on anything that falls under the Grenfell Act. It may be a minefield, but think about it. If you can afford it, and you don't mind locking up one bedroom with all your private stuff in, you can Airbnb it, all right? Airbnb it. I've looked into it and done a survey of the Airbnbs in London. You're looking at an ongoing rental yield of between 7 and 11% for short-term tenancies, which is fantastic. It's a great yield, and it gives you somewhere you can use yourself. So, what are the costs? Anything between 600 and a million to get in. So it's not cheap, not for the faint-hearted. I think it's time the London market started to move. It's been flat for so long. It's been flat for nearly 10 years. It's down at the moment. Perhaps it is time to start looking at it and think, well, the London market always leads the UK out of recession, and the London market is in recession at the moment. So perhaps it's the start of its part of the cycle to go up. So have a think about that. Okay, a few comments from this week. I work in the industry. What I want to add is that recent changes, this is Jerry Orange 6983. Recent changes made by Labour basically banned poor people from investing in the market. A lot of truth to that. And also the current immigration policies and the current lack of building progress means that people can't get into the market either. So I think, again, I'm bang on about this and I do apologise. Politicians have a lot to answer for. Another comment from similar to one we had last week. Apparently there's 300,000 landlords in London have sold up. I don't believe it's 300,000. I know it's 17% more properties on the market today that were previously rented, for sure. But where are they going? I think we're finding that, and I've done quite a lot of reading on this, a lot of these people are buying through companies, SPVs, and they're the professional SPV buy-to-let people who are doing that. So you're seeing a lot of mums and dads, people of my age leaving, but you're not seeing, and you don't appreciate the number of companies now buying in that are doing it. Okay, finally, a comment. Only one problem we have in the UK market is that failed governments we've had over the last 20 years. Yeah, they're all too worried about getting re-elected and re-voted. I mean, Donald Trump, strange as he may be, he gets things done, even if it's in many cases in a bad way. Our people are all too worried with their old boys networks about making sure it all works for them. So there we go. That's it for this week. Bank of England cuts rates. Fantastic. May it happen more, may more people get confidence, may more people buy in the market, and I think they will. Buy a flat in London, Not a bad idea. Think about it. What was the second point I made? It was so good I've forgotten it. Immigration. What can you say? Welcome to the UK. I hope it works out for you. Please do add value. I'm sure you will. I mean, a lot of you come from places that have had pretty shocking backgrounds, and immigration has built. If you go right back to the 1500s, the lace manufacturers coming over to Nottingham from France, that built the lace industry up there. Then you have waves and waves of different sorts of people coming in, and they've all added value. I see no reason why these people won't add value. We just need to embrace them and get them on board. Okay, many thanks. Take care. Cheerio.